All right, today is Thursday, October 19th, and there's a lot going on. Tesla reported earnings, Netflix reported earnings, and we have the 10-year yield trading at 16-year highs. So, obviously, this is moving the markets. Plus, we have Powell speaking today, so we got to talk about this and also how does this affect our positions. Welcome to Coffee with Markus and Mark, and in this show, we are going to talk to you about what's happening in the markets and how we are trading it. We're live from Cayman Island.
We are.
And if this is your first time here, I'm Markus Heitkoetter. This is my coach, Markus, and we're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And geez, up, and away.
Interesting, Markus. Look at that.
Yeah, so that's the 10-year yield, making, we have to switch to a weekly chart here so that we can see it almost to a monthly chart, I think, that we see at what levels we are. These are levels that we haven't seen since the financial crisis. So
2007.
2007, what's behind this move? Why are the yields suddenly rising so much, even though the Fed hasn't been doing anything? We talked about it yesterday. Since May, the Fed has been raising rates by 0.25%. The 10-year yield has been rising by 50%.
That's just an impressive move, and really it just goes to show that investors believe that these higher yields are here to stay, that it's not just temporary, that it's not just a short-term move that traders and investors expected early on when the Fed started to hike their rates. And it makes for an interesting market.
Yeah, because everybody expected that the Fed would raise rates. Okay, inflation would come down, and then they would lower it fairly quickly. And this is where now traders are believing the Fed and Powell when they say, okay, we moved it all the way up there. We're staying here for a while until we move further down. And this is where, I mean, it's really interesting to see how the probabilities are changing.
Let's look.
Let's take a look. All right.
Stake watch. 2023.
Take watch. In 13 days, 2 hours and 57 minutes, the probabilities of you getting a box of steak is now at 95.9%.
I like those probabilities. I also like the steak you bought me last night. So it was kind of a double win for me. But doesn't mean you get out of the box.
Yeah,
in
and
November.
again, for those of you, if you're just tuning in here, so we had a bet going on that we put on a few weeks ago where I said, I believe that in the November meeting, the Fed will raise interest rates one more time, which is right now a probability of 4.1%. You said, nah, they won't. And it seems you're right. And we bet a box of steaks.
We'll see. However, we know that earnings have been a big deal this week, but Powell is speaking at the Economic Club of New York at 12 Eastern today. And this has turned into something that traders are really, really waiting for, it looks like.
Yeah, especially with all of the other Fed members speaking this week and the other Fed members basically saying, okay, I believe we can lean back and see what's happening in the markets here right now. And again, this higher for longer has kind of become a mantra. It seems that every single Fed member who's speaking just repeats this mantra. Well, the rates are here, and it's higher for longer.
Exactly, and this is Powell's last chance really to set the stage and the tone going into November's policy meeting. So they have a 2-day policy meeting, and they wrap it up and announce their rate decision, their statement, and then there's a press conference as well. And, you know, he might not help the markets. He might continue with his stance that, hey, we need to do something here.
Yeah, he probably repeats the same thing where he says, okay, we're not done yet, even though we have seen some progress. What traders are really interested is in hearing, okay, how does he address last week's data? We had the CPI coming in higher than expected, the PPI coming in higher than expected, and earlier this week we had the retail sales coming in also higher than expected, meaning that the economy is still strong. And this is what everybody is expecting, that he is addressing these key data and letting us know whether he's concerned about it or if he says, well, we do believe that the markets are actually doing the job for us because we see how much these 10-year yields are rising.
Yeah.
So also interesting, I mean, if you look at the This is the 10-year yield versus the 2-year yield. And that's where last year everybody got concerned when we went to this inversion, right? Where the 2-year yield actually was higher than the 10-year yield. Look at this. We're approaching the zero level and then going back towards more of a more normal level.
Sure. And so this is just comparing the two yields in one chart.
Yes.
Interesting.
Oh, I thought they wanted to say something else.
No, you got it.
Right. I mean, just so to give you an idea of where we usually are. So, I mean, the 10-year yield needs to be higher than the 2-year yield.
Yeah, look at that baseline. Actually, Marcus, it's a good point because you look at that green line and you see what's normal, and then you see that when the Fed started to raise rates and in their attempt to tackle inflation, you had that inversion.
Right, and this is where he said when there is the inversion, that is a recession indicator. And that's where we're still waiting for. Will we have a recession? Is it a mild recession? What is happening here? But data just supports it's looking strong. Yeah, and I mean then in addition we have earnings, and we still have the mixed bag of earnings, and it is so interesting because I mean the earnings that we saw today couldn't be any more different than they tried.
Yeah, flip-flopping all over the place.
Tesla and Netflix reporting earnings. Where do you want to start?
Start with Tesla.
Let's start with Tesla. Let's take a look at Tesla here and see what Tesla is doing. TSLA is the symbol. Looking at a daily chart here, and I'm zooming a little bit in so that we can see it. And we see Tesla gapping down and moving lower right now, down 8.5%.
Big drop, and this is where they had an earnings miss, but then also didn't say what investors wanted to hear.
Yeah, so the earnings missed the first since 2019. I mean, before that, they always exceeded expectations, but this is the first time that both in terms of profits and in terms of revenue, they came in lower than expected.
Exactly, but then to add insult to injury, investors really wanting to hear about the Cybertruck progress and how that can affect the bottom line for Tesla, and basically saying, you know what, we're probably a year away from that having any impact on positive cash flow.
Yeah,
essentially. I mean,
I
not
think
word for word there.
The other thing is the cautious commentary from Elon Musk saying, hey, the economy, and we're seeing an impact. And this is where Elon Musk is not known as an economic specialist. I mean, it's not like Jamie Dimon, the CEO of JP Morgan, right? So it sounded more like an excuse than really knowing what's going on in the economy, and basically just delivering a lame excuse for missing expectations here.
Yeah, so just kind of a combination of things, leaving investors, maybe taking some profits or unloading some positions, creating a little selling pressure.
Yeah, so looking back at the chart here, I mean, Tesla, this is just a wild animal. If you zoom out here a little bit so that we see where we have been trading over the past couple of years. Oops, just wanted to see. I mean, this is where if you look from 2021, so we're looking over the last 2 years, we were trading as low as $80, as high as $400, then dropping back towards $100, and right now hanging around $220. Yep. I mean, it just, this is 5x. This is a massive drop.
Exactly. So a lot of movement there, some weakness with today's session, dropping and then continuing to slide.
Yeah. So on the other hand, Netflix reported earnings, and Netflix has been shocking investors in the beginning of 2022, where they basically said, well, we're not growing our subscribers anymore. And then it was kind of a double whammy where they said we're actually losing some subscribers.
Exactly. So for Netflix, not only is it about profits, but it's about their subscriber base and whether or not that's growing or not. And in this case, one of the issues that they had to deal with, password sharing, and just how many people had access to their Netflix accounts without making money on it. And so they introduced that ad tier, and it sounds like that was a hit.
Yeah, so they announced that they will crack down on password sharing, and ever since investors liked that idea, But now everybody wanted to know, okay, what impact does it actually have? And this is where they have revealed some more of the impact and said, okay, it surges actually 16% after they started cracking down. So that is great. Plus, they also said, all right, we actually gonna raise subscription prices again.
Which helps the bottom line.
Helps the bottom line. Let's just see. I thought that earlier we looked it up here with our mastermind, how many subscribers they had. I don't know if it is in this article, but they have around 240 million subscribers worldwide. So recently we have seen that they raised prices and haven't lost any subscribers. So if they raise prices by just $1, that adds $240 million a month to their bottom line.
Not too bad.
Every $240 million helps.
I take it.
Right? So going back to the chart, I mean, this is where today we see that Netflix is soaring. I mean, up now 15%. And if you look at a 5-minute chart, we just see that, okay, they opened higher and they're hanging out there. Because often what we see when we see a huge, massive jump as a report that this comes down, but they are hanging out here right now, right at around 400.
An interesting move and definitely some strength.
Yeah. All right. Let's take a look at our positions. See what happens there. Okay. So let's start with our little buddy, CSIQ.
CSIQ. So CSIQ hanging out right around 22. Looks like we're starting to see stronger support in this 2150, 22 range. And again, mixed feelings here. We mentioned it over the last couple of days because on one hand, we'd love it to just rocket higher. But what we will do when we put on a trade, and if it's a stock we want to own and it pulls back a little more than expected, we're willing to add to it. And this is what we refer to as a rescue mission. I'm perfectly fine doing a rescue mission on CSIQ. I just want to see that we've found support and we're just not in a free fall. This is looking pretty good.
Yeah, and initially we thought that we would wait until the Fed meeting, but with Powell speaking today and we probably see a reaction in the market, that might be something that we can consider as early as next week already.
Exactly. I don't feel as though I need to wait, but I'm mindful of what reaction that could take place.
Yeah. All right, Goldman Sachs. That's a position that we entered yesterday again, and that's also quite interesting. So we did sell the 305, and this happened after you sold last week the 312.50, got assigned, closed it on Monday with a profit, and then there was an earnings reaction and we sold the 305. So right now trading at 303.87. Are you concerned?
No concerns at all. I was happy to own Goldman at 312.50, but again, taking off the position ahead of some earnings risk and exposure. I like that range. I like support around 305. So sold the 305 put. Okay, getting assigned there. Right now, if the markets were to close the week today, we would get assigned. But the week is not over yet.
And I really would like to get assigned because it seems that we have a really strong bounce back. So what if we get assigned at 305 and next week we are going to 308, 310, or maybe even towards the top of the range, 315? I like that.
Yeah. Goldman seems to really find some nice support levels where there's some buying interest, and then we start to range a little bit. So a range from 305 to 315 would be a nice range to take some profits, make some money on calls.
Yeah. Next Era Energy. I mean, hanging out here after this pretty substantial move up here. Right now hanging in there, and I believe that we are ready for the next move towards 60. I mean, we got assigned at 69.50, so still a little bit ways to go. Right now, too high for me for a rescue mission. In order to consider a rescue mission, it would have to come back down here, but of course, that's not what we want to see, so I'm going to re-erase this really quick here.
Why even give it an idea?
No. You see, make more arrows, or maybe even one big arrow. There you go. Is that better?
Secret charting of experienced traders. The more you doodle, the more
the market moves this way.
There we go.
Okay. Anyhow, so nothing to do there. PNC, super interesting today with rising interest rates, which is usually bad for banks and mortgages because they are not, I mean, nobody wants to refinance right now with mortgage rates hitting 8% and more.
It gets tricky because you're right. With business, sure, they can make more money on higher interest rates, but then if there's less business transaction, that isn't good. And then also the potential for defaults rises as well, so that they have to set some money aside for that. So it's kind of a mixed bag for them, but looks like we have some nice support there.
Yeah, I like it that we're bouncing back and that we're up today on overall a down day. Let's see if this holds for the remainder of the day. Plus, we do have UPS, and UPS did me a favor this morning. So I got assigned at 157.50, sold calls against it earlier this week. Today, with the move lower, I was able to close that call at 90% of profits. And I'm liking this because if UPS pops higher again, I can sell these calls again, expiring next week.
Happy for you. I'm a little disappointed because early on this week, it looked like we were attacking that that upper range there and that we might break through. That was looking good, and I was hoping that would continue, so I'd be able to sell 165 calls. Based on my plan, there was the potential on Monday, but that has fizzled. So right now, it's just keeping an eye on things. We do have earnings next week.
Yeah. So UPS pretty much in line with the overall market, down 0.6%. Speaking of the overall market and seeing what's happening here, going into Powell's speech, which is now in around 45 minutes from now, we see that markets are a little bit nervous, but it's a nervous waiting. So we opened a little bit higher. We're hanging out just slightly higher now, down 0.3%. But you just see how the market has been waiting here, and then, oh, Powell is tweaking, and then we're waiting here. So, I mean, it's really like, okay, what will I say? That is definitely the event of the day.
Yeah, that looks like a hurry up and wait market move for sure.
Yeah. All right. Well, we'll see. It will be super interesting, and then also to see what effect it has on our positions. And therefore, make sure that you stay tuned and that you tune in again. If you like the show today, click on like. If this is your first time here, hit subscribe, hit the little notification bell. This way you get notified. And if you found this video helpful, please share it with others who might find this helpful too. All right. We're going back here to our mastermind members, and this afternoon we have a fun excursion planned.
Happy trading.
Okay. And with that cliffhanger, we'll see you tomorrow.